All right, let's dive into the wild ride that's shaking up the global economy. The United States just dropped a massive 50% tariff on Chinese goods. And let me tell you, it sent Wall Street into a frenzy. Within hours, hundreds of billions of dollars vanished from the markets. The Dow Jones took a nosedive, plummeting 1,679 points, marking one of the roughest trading days this year. Big players like Apple, Tesla, and Walmart watched their stocks get hammered, with Apple shedding 9% and Tesla over 5% in a single day. Investors scrambled for cover, piling into government bonds and pushing the 10-year Treasury yield down from 4.3% to 4.0%. Isn't just a numbers game, it's hitting real people. Those tariffs mean prices for everyday stuff like phones, TVs, and sneakers are creeping up, climbing between 0.4 and 0.6%. So, while the White House says it's protecting American interests, folks at home are starting to feel the pinch. It's got everyone wondering, is this a genius move to shield the economy, or a risky bet that could backfire? When the two biggest economies, making up nearly 40% of global wealth, start trading blows, it's not just boardrooms that feel it. The whole world's supply chain gets rattled, and we're all along for the ride. Okay, so the United States threw a big punch with those tariffs, but China's not sitting back quietly. They clapped back fast, hitting American goods with a hefty 34% tariff, covering everything from farm products to electronics. A top Chinese official laid it out. Plain and simple, we're expanding into new markets and cutting dependence on the US. It's a bold move, showing they're ready to play hardball and look elsewhere for trade partners. You've got to hand it to them for not blinking in this high-stakes game. But here's the real talk. China's got some cracks under the surface. Their property market's a mess, with over $2 trillion in debt weighing them down. Plus, they're scrambling for high-end chips, especially the kind needed for electric cars and defense tech. That chip shortage is a serious hurdle, holding back some of their biggest industries. On the outside, China's flexing like they've got it all together. But these internal struggles show they're walking a tightrope. This trade war's not just about who can slap on the bigger tariff, it's a test of who can hold steady when the pressure's on. China's betting they can outlast the United States, but with those economic weak spots, it's anyone's guess how long they can keep up the front. So, while China's juggling its own challenges, the United States is feeling the weight of this trade war on a bigger scale. The national debt's ballooned past $36 trillion, $200 billion, and just paying the interest is eating up $892 billion a year, more than what's spent on defense. That's a tough pill to swallow, and it's got some investors side-eyeing the dollar's future. The DXY, which tracks the dollar's strength, is sitting at 102.7, but even that feels shaky, like confidence could slip any moment. If the world starts doubting the dollar, things could get messy fast. On the home front, there's a sliver of good news. The southern border's been a hot topic forever, but public support for immigration policies has climbed to 28%, way up from a few years back. The White House is hyping this as proof they're not just stuck on tariffs, but it's hard to celebrate when prices are creeping higher. Those tariffs are already nudging consumer goods up by 0.4 to 0.6%, hitting wallets where it hurts. People are starting to wonder if the focus on trade fights is drowning out the wins elsewhere. It's like trying to cheer for a touchdown, while the scoreboard's showing a losing game. All right, while the United States is wrestling with debt and politics, China's playing a different game, and it's a smart one. They're not just fighting back with tariffs. They're rewriting their whole trade playbook. Through the Belt and Road Initiative, China's pouring cash into places like Africa, Latin America, and Southeast Asia, building roads, ports, and partnerships. It's a big shift, with 40 to 45% of their exports now heading to developing nations instead of the United States. That's no small thing. It's like they're drawing a new map, where America isn't the main destination anymore. This isn't about throwing shade at the United States. It's about China carving out their own space. They're quietly pulling away from American markets, betting on these new ties to keep their economy humming. It's a long-term plan that's got folks talking about a world where global trade doesn't revolve around one country. China's not saying they're done with the United States entirely, but they're making it clear they've got options. It's like they're building their own club, and more countries are signing up to join. The way things are going, it feels like the old rules of trade are getting a serious shakeup, and China's leading the charge with a smile. Now that China's branching out with new trade buddies, they're also making waves in the tech world, especially with semiconductors. For years, the United States ruled the chip game, with giants like Intel and AMD calling the shots. But China saw a chance to grab a piece of that $700 billion market and went all in. They've poured $410 billion into research and development, building their own chip-making ecosystem from the ground up. It's not just talk, they're cutting imports from the United States and the West. by nearly 50%, leaving American companies stunned. When the United States tried to slow them down, with sanctions banning exports to 140 Chinese firms, China didn't back off. They flipped it into fuel, pushing harder to stand on their own. Companies like SMIC are now cranking out advanced chips, doubling China's global market share from 15 to 30%. They're not just catching up, they're passing big names in some areas, like NAND flash memory, where YMTC's tech is leaving others in the dust. It's a bold leap, showing China's ready to challenge the old tech order. The United States thought they'd keep the crown forever, but China's proving they're a serious player, ready to reshape. Who runs the show in Silicon Valley's backyard? With China charging ahead in tech, the trade wars hitting a whole new level of intense. The United States upped the ante, jacking tariffs on Chinese goods to a jaw-dropping 104%. That's no small change. It could double the price of toys, phones, even cars by thousands of dollars. Trump's calling it a way to punish Beijing, but the blowback's real. In just one trading session, over $700 billion vanished from markets. Across the Pacific, Asian stocks tanked, with Hong Kong's Hang Seng crashing 13%, the worst drop in decades, and Shanghai losing $500 billion in value. China's not playing nice either. They're hitting back by tightening the screws on rare earth metals stuff, like dysprosium and neodymium that's crucial for everything, from electric car batteries to military gear. They control 90% of the global supply, so when they started requiring licenses for exports, it sent shivers through American companies. Analysts are calling it a sneaky ban, and it's got markets on edge. Wall Street's down 10 to 15%, and investors are scrambling for gold and bonds to stay safe. This back and forth feels like a high-stakes poker game, but the whole world's stuck watching, wondering if these two giants are about to tank the global economy with their next move. So, with tariffs flying like punches in a heavyweight fight, the fallout's hitting way beyond Wall Street. Regular folks are feeling the squeeze, and it's not just about numbers anymore. Those trade taxes are jacking up prices for everyday stuff. Think bananas from Costa Rica, getting slapped with a 10% hit. Shrimp from Vietnam, facing a whopping 46%. Or your morning coffee from Brazil, tacking on another 10%. Grocery stores can't absorb that forever, so soon enough, shoppers are going to see their bills climb higher. It's the working class families, retirees on fixed incomes, and small town folks who'll feel this the most, wondering how to stretch their dollars when everything costs more. Across the border, Canada's not staying quiet. Foreign Minister Melanie Joly didn't hold back, saying flat out, the relationship between the U.S. and Canada will never be the same. That's a big deal when you share the world's longest border. Canada's hitting back with their own tariffs on American goods like steel and cars. And it's not just about money, it's trust breaking down. Prime Minister Mark Carney doubled down, declaring, "I will reject all attempts to weaken Canada. All attempts to wear us down, to break us down so that America can." He's rallying Canadians to stand firm, even urging Americans to call out their leaders. It's like watching a friendship fray in real time, and nobody's sure how to mend it. Then there's Germany, caught in Trump's crosshairs for their clean energy push. He called it a scam, but Chancellor Angela Merkel fired back, stressing that Germany's green tech is years of hard work to cut emissions, not some passing fad. For them, it's a matter of principle, not just policy, and they're not about to backtrack. These fights with allies are piling up, making the United States look more isolated. Back home, the vibe's tense, people are frustrated, allies are bristling, and the trade war's ripple effects are hitting harder than anyone expected. It's a messy moment, and everyone's waiting to see who bends first. All right, with prices climbing and allies pushing back, the trade war's getting even spicier. China's not just matching the United States' moves, they're swinging harder. After Trump's tariffs shot up, Beijing slapped heavy taxes on American soybeans and sorghum, key exports that hit farmers right where it hurts. They didn't stop there. China's also freezing out American movies, financial firms, and even cooperation on fentanyl control, making it clear they're ready for a long fight. Vice President J.D. Vance stirred the pot, calling Chinese manufacturers farmers, which only fanned the flames. China's response? A firm promise to keep piling on measures if pushed, showing they're not about to roll over. Across the ocean, Germany's got their own beef with Trump. He took a swing at their clean energy policies, scoffing that the Green New Scam hit Germany too. Chancellor Angela Merkel wasn't having it. She clapped back, saying, "Germany's green economy is the result of years of investment to cut emissions and protect the planet, not some trendy gimmick." For Germans, this isn't just about policy. It's about standing up for what they've built, a model for sustainable progress. Merkel's words carry weight, framing this as a fight for principles, not just trade deals. It's a tense moment with Germany, digging in to defend their vision against Trump's jabs. This whole mess is piling pressure on everyone. China's playing tough, shutting doors to American goods, while building their own path forward. Germany's holding the line, refusing to let their green goals get trashed. Meanwhile, American consumers are stuck watching costs creep up from groceries to gas as these global battles play out. It's not just boardroom talk anymore, it's real-world consequences, hitting farms, factories, and families. The United States wanted to flex its muscle, but now it's caught in a tangle with two heavyweights who aren't backing down. Everyone's wondering how much longer this can go before something's got to give. All right, with China and Germany standing their ground, the tech world's where things are really heating up. China's not just trading punches and tariffs, they're rewriting the rules of the chip game. They've slammed the door on tech giants like ASML from the Netherlands and TSMC from Taiwan, cutting ties after the United States pressured the Dutch to block export licenses for crucial chip-making machines worth $15 billion. Those machines? Basically useless now with no updates or support. But China didn't sulk, they turned it into a power move. Since 2022, they've funneled over $75 billion into their own chip industry, hiring 50,000 engineers, some straight from Silicon Valley. This isn't a small-time hustle. China's factories are now running with 60 to 70% homegrown equipment, churning out chips that rival the best. SMICE's testing 5-nanometer chips, and their 7-nanometer tech in phones like the Huawei Mate 60 Pro already shocked the world. They're even pushing past giants like Intel in areas like NAND flash memory, with YMTC dropping 200, 32-layer tech that's leaving competitors scrambling. ASML's feeling the pinch with their revenue tanking, 27% in one quarter alone. China's not playing catch-up anymore, they're setting the pace, building what some call Dragon Valley, a tech hub that's starting to outshine Silicon Valley. This shift's got everyone rattled. China's dumping American bonds and pulling back from stocks like Apple and Nvidia, hinting at a bigger currency fight. If they keep this up, mortgage rates could spike and retirement funds might take a hit. It's not just about chips, it's about who controls the future of tech and money. The United States thought sanctions would keep China in check, but instead, they've lit a fire under a rival that's now racing ahead, ready to reshape the global tech scene with every new chip they roll out. Okay, with China's tech scene blowing up, the spotlight's back on Trump and things are looking shaky. He started this trade war full throttle, but now he's pumping the brakes, announcing a 90-day pause on tariffs after swearing, if we delay the tariffs, it will be panic, and America doesn't need to panic. That flip-flop's got people raising eyebrows, wondering if he's scrambling as markets crumble. The European Union, once ready to fight tooth and nail, caved to his zero tariff deal with Ursula von der Leyen, saying, we are ready to negotiate with the United States. It's a win for Trump on paper, but it's left Brussels looking like they folded under pressure. China, though, they're not budging an inch, facing a 125% tariff hike. Beijing's standing tall, refusing to play ball. Their defiance is spiking prices for goods from Brazil, Indonesia, and Vietnam hitting American shoppers hard. Coffee, seafood, you name it. Costs are climbing and retirement funds are taking a beating. Canada's adding to the heat, with Prime Minister Danielle Smith hinting they might redirect 4 million barrels of daily oil exports to Europe or India, saying we could actually redirect those purchases somewhere else. That's a big threat, considering 700,000 barrels go straight to America's Gulf Coast. If Canada pulls the plug, gas prices could jump 20 to 40 cents a gallon in places like New England. American workers are feeling crushed, with 62% in industrial states, saying these tariffs are killing their livelihoods. Farmers are begging for a truce, one pleading, I hope it ends with us willing to be good partners with these countries. Trump's team insists it's all strategy, but the chaos, skyrocketing costs, angry allies, and a stubborn China makes it feel like a gamble gone wrong. Everyone's left wondering if this is still a plan to win, or a recipe for economic disaster that could cost way more than anyone bargained for.